Hello, everyone. The good news is that we only have one new speculative long position tonight. It's less than 1% of the portfolio, so it's not a big deal. So we can focus a little bit more on this market. I'm going to use I should just use the ETFs. They're going to be easier for me to pull up overall. But if we look at the Russell 2000, we can see that this index, despite the 3-day bounce, is still trailing below its 50-day moving average and 200-day moving average, still lagging overall. So everybody's getting really excited that they believe that we've now seen the low and that we're having a series of higher lows. But I don't know why people also don't see that we're also having a series of lower highs. So at the same time, this is not a really good, strong setup, despite what people think. It's a great Christmas bounce, but I hate to tell you, low volume Christmas bounces normally lead to higher volume January sell-off. So just keep that in mind. And don't forget, a weak December in a lot of years has led to weak markets or choppy markets. It hasn't always, but it is something that's historically happened quite a few times. And the most recently in 2014, we had a down December. Weak 2015, we had a down December. In 2007, bad 2008 bear market. Happened numerous time in the 70s in the bad 70s market. So it's just something to consider. Also, I posted in the new positions page last night. The OEX put call ratio has hit 3 for the first time ever. I know volume's dwindling on that exchange overall, but that's where the smart money trades. And it's getting, they're making a lot of bearish bets despite this bounce. So just keep that in mind. It could move the opposite way, but I don't know, man. This bounce looks pretty weak. And let's look at the SPY. If you look at the SPY, what you're looking at from August to December, I can unequivocally say is one of the worst technical patterns I've ever seen in an index that's basically gone nowhere. Not only is it V-shaped and choppy, but the manner that it's done it in December is just odd. On the indexes, this is all like normalish to me, you know what I mean? Like it's odd here, the island that it created there, but overall I can say, okay, I get it, but this I don't get. This is some weird V-shaped moves. I don't see how that in time produces a strong market uptrend. I really don't. I'll take signals that they show up, but I just would expect with a chart like this that it's going to be messy and sloppy for a little bit. The NASDAQ 100, they both get back above their 50-day moving average. Does that mean it's back to a neutral? Absolutely not. Since there's no volume on the rally, as you can see here on the NASDAQ and you can see here on the New York Stock Exchange, all below average volume. Minimum on the NASDAQ and the NASDAQ 100, it's going to have to take out those late December highs. So until we break above these highs right here, there's no way in hell our model's switching to neutral. Everything remains under a sell condition. A lot of oscillators are still trending lower, despite despite the small hookups like in TSV. Overall downtrends pretty solidified on all 4 major momentum indicators in the NASDAQ 100. Same thing with the NASDAQ. They're all still trending down despite this bounce. S&P 500, similar situation. Little hook higher in stochastics, but overall the trend is still clearly down. So it's hard to get really too excited about this Santa Claus rally. The only thing that is interesting is that one of the best books I've ever read on the stock market was by one of the greatest traders ever, Marty Zweig's Winning on Wall Street. I haven't read it in a while. I probably need to reread it. One of the things, though, you're supposed to do is for holiday trading is that you go long the market the week of the Christmas holiday and you sell. I can't remember if it's before New Year's Day or right after New Year's Day, but you stay long those 2 weeks if the day before, the Friday before the holiday, is a down session. So Friday, we sold off huge and we looked like to break down. This is why I really wouldn't want to even do this. But look what we've done, the last 3 days. And now let's say SPXL, let's say you go long this a leveraged account in the Standard & Poor's 500. Well, in 3 days, you have a 9% gain on your money. And since it's such a high reward to low risk situation, because what we would do here is that you go long here, and then the final sell stop is 78.15. So you're long at, let's say, 80.12, and at 78.15 you're out. And if you use all your, if you use your entire account balance, that's less than a 2% loss on your entire, the entire position of whatever cash you have in your account. So this is something I'm going to start considering TQQQ, something in the future. In 3 days, the TQQQ is up 7%. SRTY, of course not URTY. In 3 days, that's up 9%. So this is something to consider. The UDOW, 3 days, it's up 8%. We'll see how it goes out, though. We'll see if we're up again on Thursday. We'll see if we trend higher into the New Year's. I have to get the book out, and I have to see what the rules are. But I know, do I have the website up by chance? I do. Holiday, up, down, Christmas, 25-7, New Year's, 31-1. So do you understand the risk, not the win-loss ratio, the risk-reward? Same with Thanksgiving, same with Labor Day, July 4th, Memorial Day. So there's ways to play these where you can put all your money at work in a leveraged account, and if you're wrong, you get a very tiny loss because the sell stop's right there to take you out. And if you're right, the win-loss ratio is so big. So this is something I'm going to start probably incorporating in my portfolio because I got a lot of cash on hand. And I tell you what, wouldn't have mind of getting a little bit of that big, move in 3 days and the leveraged indexes, 8%, 9% to 7%. But overall, the makeup of this market is quite disgusting. Very, very, very weird V-shaped moves. And this is one of the weirder ones that I've seen throughout the entire year, actually throughout this entire fucking uptrend since 2009. What a weird uptrend this has been. Boy, oh boy. We'll see how this resolves itself, but right now, not looking too good. I have no sells, and I flagged JRJC. If today's candle pattern would have occurred on this day, I would be long JRJC on the 18th, but JRJC finished off the highs. Not long, and this move right here makes it too extended from the first clear-cut loss area of 596 or 601, whatever you want to use. JRJC, I still flag that one. QCRH, canceling quality, also confirmed the new 52-week high scan, but just looking at an arithmetic chart, you can see how fucking ridiculous this thing is, so I have no interest, so I'm going to pass. And then NCS off the lows, a lot of green bop in this one, a green bop surge, volume surge, but not max green bop, and without a pocket pivot point signal, I can't think of really buying this bounce, considering that there is still short-term overhead resistance. I mean, the stock's not even above its 5-day moving average or 10-day moving average. I can't get long anything that's below the 5-day moving average, which brings me back to PAC B, which is now up 38% since I passed on it on 12/8, but I'll remind everybody, it wasn't even above the 5-day moving average, and that's the minimum I need to see if it doesn't close off the highs, and it's kind of in that kind of consolidation range. I mean, hindsight, obviously, I wish I would have bought it. Beautiful chart. You got the max green bop surge. You got the volume surge after quiet volume. Everything's there. The only thing is that it's not closing high enough to 987 at 971. I would have needed at least see 973. That puts above the 5-day moving average. I can get long. PAC B, we're long the entire move. So as it is, the only new long position, RKDA, Arcadia Biosciences Incorporated, bouncing off the 50-day moving average with a pocket pivot point signal. Nice bop surge to a much higher green bop level than where it was at right before it spent a couple of days at yellow. The volume surge is nice. While volume isn't necessarily quiet, the 2 days that it's kind of higher, you got tails right here. So with those 2 tails and the big move on strong volume to start the move, and then the overall lower volume on the pullback, this bounce pocket pivot point signal move off the 50-day moving average is extremely nice and something I want to get long. So Arcadia, clear-cut loss level, you can use 317. I might be a little bit more risk averse and go ahead and might do 317, but I might loosen it up and go 312. I don't know. 312 is probably where I'm going to put mine. 317, but if it moves up and moves back into intraday range, I might move it back up to 317. But for now, 312. Nice volume bop. Price surge to close near the highs. Now, if they're closing at 353 to 354, if at the morning the bid is at 354 or higher, I will just go ahead and risk a market order because I just want to get long. VEDL is now running without me. Barely missed my long in the morning. 510, got down to 512. I think 510 was my limit, so I missed it by 2 cents. Then I moved my limit up to 512, got down to 514, missed it again by another 2 cents. And WB, the first day, gapped up from 18.90 to 19, missed it by 9 cents. Moved my limit up to 19, traded down to 19.01, missed it by 1 cent. Wouldn't rather not have that happen again on RKDA.